Remember that the following content is just a summary of information available on the internet, generated by AI. Investing decisions carry risks. Celsius Holdings Incorporated is a U.S.-based energy drink company specializing in better-for-you beverages, healthier alternatives to traditional energy drinks. The CELH brand has gained popularity due to claims of boosting metabolism and aiding fat loss, making it a favorite among fitness-conscious consumers. The company has been expanding rapidly both domestically and internationally, with strong revenue growth and increasing market share positioning it as one of the fastest-growing firms in the sector. In the fourth quarter of 2024, Celsius reported revenue of $332.2 million, a 4.4% decline compared to $347.4 million in the same period the previous year. This decrease was mainly due to higher distributor incentives and marketing programs. On the other hand, international sales surged by 39% year-over-year, reaching $20.3 million, driven by expansion into new markets, including the United Kingdom, Ireland, France, Australia, and New Zealand. Gross profit margin improved to 50.2%, a 240 basis point increase from 47.8% in Q4 2002. This improvement was primarily attributed to lower outbound freight and material costs. Selling, general, and administrative (SG&A) expenses rose 73% year-over-year to $185.2 million, driven by legal expenses related to ongoing litigation, as well as one-time restructuring costs and contractual obligations with third-party manufacturers. The company reported a net loss of 11 cents per share, compared to a net income of 17 cents per share in Q4 2002 adjusted for one-time costs. Non-GAAP earnings per share were 14 cents, down from 17 cents in the prior year. Despite reporting a net loss, the stock surged to $30 in after-hours trading, indicating that investors focused on long-term growth prospects rather than short-term profitability concerns. Key reasons for optimism include higher gross margins, growing market share, and strong international expansion. A major development for Celsius is its recently announced acquisition of Alani Nu, a premium functional beverage brand primarily targeting female consumers. This acquisition is expected to strengthen Celsius' position in the market by expanding its product portfolio and customer base. Alani Nu has been rapidly gaining market share, and the acquisition is anticipated to create operational and distribution synergies. However, there is some risk that integration costs could temporarily weigh on Celsius' financial performance. Within the competitive landscape, Celsius continues to outpace its rivals. Its U.S. market share has increased to 11.8%, up 1.6 percentage points year-over-year. Retail sales rose 22%, significantly higher than Monster's 9% growth and Red Bull's 6% increase. The strategic partnership with PepsiCo remains a crucial factor in expanding Celsius' distribution network and brand recognition. From a technical analysis perspective, the stock has encountered resistance at $26.10 and support at $25.70. The average cost basis is $26.98, suggesting that many investors are currently at a slight loss. The after-hours surge to $30 indicates strong buying interest, potentially leading to further price momentum. Analysts have set an average target price of $37.27, with a price range between $26 and $62. Their recommendations are mixed. 5 analysts rate it as a strong buy, 10 as a buy, 5 suggest holding, and 1 recommends underperforming. Macroeconomic conditions suggest that the U.S. economy is currently in a slowdown phase, characterized by rising unemployment and declining consumer demand. The energy drink industry, classified under discretionary consumer goods, typically underperforms in such economic conditions. However, Celsius' rapid market share gains could help mitigate potential demand slowdowns. Additionally, since the company carries very low debt, high interest rates pose minimal financial risk. Given the latest financial results, market trends, and the potential benefits of the Alani Nu acquisition, Celsius remains a high-growth company with strong long-term potential. However, in the short term, rising operating costs and potential further net losses may increase stock price volatility. Long-term investors may find current price levels attractive, particularly if the company continues to expand its market share and improve margins. Short-term traders should closely monitor upcoming earnings reports and investor reactions. This analysis does not constitute investment advice. Investors should consider market risks and their individual investment strategies before making decisions. We invite you to subscribe to our channel for easier access to future analyses. Please like the video to help us understand your needs better. If you want us to prepare a similar short report on another company, write its name in the comments. We do not engage in brokerage activities consisting of investment advice, portfolio management including one or more financial instruments, or preparing recommendations regarding transactions in financial instruments, or any other brokerage activities specified in the Act on Trading in Financial Instruments. Journal of Laws, 2005, number 183, item 1538. In accordance with Regulation EU, number 596/2014 of the European Parliament and of the Council of April 16, 2014 on market abuse, and the Commission Delegated Regulation, EU, 2016/958 of March 9, 2016 supplementing Regulation EU, number 596/2014 of the European Parliament and of the Council with regard to regulatory technical standards for the technical means for objective presentation of investment recommendations or other information recommending or suggesting an investment strategy and disclosure of particular interests or indications of conflicts of interest. The information provided in this recording is a compilation developed based on data and content collected from various internet sources, which are not always fully verified by us. They are for educational purposes and as part of an experiment on AI capabilities. When making investment decisions, the user should rely on their own judgment. Transactions conducted by the user are considered their own independent decisions.